Hey everyone, what's going on? Jamie Saettele here, Midweek Strategy Webinar. It is February 1st, 2018. And let me know, hey, what's up? Everyone in the room. Amir, what's going on? I'm assuming you guys can hear me, right? Yes, all good. Okay, super. Pete, Amir, great. So I'll start real quick. Just wanted to show this update on remember the Bitcoin silver analog that we've followed for so long, and it's again the red line is silver back to the 70s blowout, and it's really the only market that I thought made any sense to compare the Bitcoin rise to, and continues to work out pretty well. Had to make a little bit of an adjustment. If you recall, we had it like it was more like this, right? And we were looking for the blowout into November, and it obviously continued. So if we just, gotta update it, and kind of the three peaks that you had here with silver and Bitcoin, same kind of deal, even weaker with the Bitcoin with the lower right peak, and it's really started to fall apart. So, bounces along the way, maybe, sure, whatever, but I actually wouldn't really be looking for much of a bounce or, a big trading opportunity, frankly, in Bitcoin until probably about 4,000. That's where it says that we can go. So just wanted to update you quickly on that, and then we'll get back into serious people markets. All right. So the price action of late in the dollar for the last week or so, again, sideways to be expected based on the analog, and we may still be sideways really for another week or maybe even a week and a half. Does make a lot of sense, not just from the analog standpoint, but also from the Elliott wave, interpretation, right? And that is that we are, we've seen some extreme moves here recently, and those extreme moves are, an extreme rate of change, right, is usually what you would call a third wave. So going to the near-term charts, this is DXY, right? And you can see the extreme RSI reading down here. Very, again, typical of a third wave. So when it comes to DXY and the US dollar in general, I am looking lower. Again, for that 88 area, maybe even, 87 and change or something. There's 87.60 is a level. And we are looking lower before I'd really entertain kind of wanting to buy dollars. But the near-term picture and how to trade it obviously is not so simple right here, because fourth waves can take on so many different forms. And what kind of a fourth wave? Excuse me. What kind of a fourth wave is it? If we let's go to a 4-hour chart on DXY here. All right. Log scale. Okay, so what kind of a fourth wave is it? Like, are we, what kind of degree is it? So if this is a 1, 2, right, is this wave 4 of same degree as this one? I actually don't think so. I actually think that it's probably more something like, if this is 1, 2, 1, 2, 3, 4, 5, I actually just think this is a pretty minor fourth wave. In other words, we're going to have a real choppy back and forth probably over the next couple of months, because you're talking about a series of fourth and fifth waves, right? Like a sharp drop, and then a bounce in a fourth, another drop, right? And then eventually we will get the fourth wave that goes with this second wave. So just trying to find levels really to trade around, albeit wanting to trade to the short side of the dollar for the time being until we obtain or get into what I consider tradable or decent support for the US dollar, right? So with DXY, it's really this line down here, which is roughly 88. Okay, so like for us to get down there, probably over the next few days before you get a bounce that fits with the sideways nature of the dollar, until we really maybe get a bigger puke out later in the maybe early second quarter or late first quarter. So levels on US dollar. So the simple stuff is often the really important stuff. And simply, folks, we broke what I'd consider a pretty important level. A textbook technician would tell you that you did not really break a trend line here because it takes, really 3 points to make a trend. I guess you could argue that you did, that maybe here, right? Something like that. But I actually take this as an important break because the parallels associated with it are so important, right? So remember the midline, which was so huge for US dollar, and that was big time resistance back in November, right? The parallel that extended off the 2015 highs from November and 2016 January, that was the top back in late 2016, early 2017. So it's an important angle, and again, just like DXY, we're talking 1, 2, probably something like 1, 2, 3, 4, and then a 5 for the big 3, and then you get your bounce in 4, which is maybe back to this level, back to this line at some point, right? But that leaves us very near term still lower, okay, for US dollar. Now, here are the kind of tactics that we can use to trade these ranges. And if you have a euro chart up right now, I would just mark 124.96 as a level, and you'll know why here in just a second. So we talk about daily reversal resistance and support, and weekly reversal resistance and support, right? Well, when you get on a very small scale, it could actually work with hourly reversal support and resistance. So you take the low bar of the hour and the high bar of the hour within the range and just put a line on the close. And you actually tend to you can trade between those levels, right? It's kind of like hidden range support, right? That is what we're looking at with this right now in US dollar itself. So if we are in, we could conceivably be finished with, with this correction, right? If we're the same degree as this one over here, we could be complete because you can actually count a triangle here. You can count A, B, C, D, E. You could be done. And this is a 200-hour average, which has actually been pretty good, right? So we could be complete here with the US dollar sideways pattern. I see Amir's got a question on Aussie Kiwi. We'll take a look at Aussie Kiwi towards the end, no doubt about it. So again, you can count a correction here that's complete. Okay. Now that does not mean that it's 100% complete. I can't predict the future, right? I can, use these tactics and I can count it. That doesn't mean it can't morph into something else, okay? But going with the trend and going with the idea that we're still lower in the dollar, right, and going with the fact that you can count a completion here does tell me that, we should be erring, if you will, to the downside. So this was 111. What I'm doing is I'm counting to see 111 hours, and we've gone a little longer than 111 hours, but actually the exact high of the correction here would be 112 hours. So it's the same amount of time, isn't it? Pretty close, 113 hours. Pretty close, right? 2 hours difference here as far as the amount of time that this correction has taken, okay? And again, that is if we're comparing this to this, right? And this would satisfy your alternation, right? Alternation being this is a sharp correction. It's A, B, C, right? A, B, 1, 2, 3, 4, 5, C. And this is sideways being a triangle pattern. All right. So let's take that. Let's take that, you know, that method or tactics or whatever, and let's apply it to, you know, euro and some other dollar pairs. Okay, so if we go to euro, this is a 4-hour chart. The high volume level from last week, Thursday, was 24.96, and the high hourly close is actually a couple pips below there. So it's right here at 24.89. You remember when we were long from right here, that's why we got out at 24.85, because we had the hourly reversal level there. I wanted to be out at that point. Now, you can see the low hour close for this is actually 23.81. It's this bar right here. That was not reached last night. It was pretty close. 23.84 was the low. Obviously the count or the pattern for euro is going to be a little bit different than it is for US dollar, because US dollar is going to have yen, pound, and Aussie in it, or this is going to be more like DXY. But we can still, you know, kind of make an educated guess here on what's going on. So you got 3 waves down, A, B, C. Okay, you've got kind of a choppy advance. Looks very much corrective, right? Kind of like, I don't know, 3 up, 3 down, pushing higher here. Not, you know, it's not all that clear from a, you know, impulsive standpoint. So what I do think that you will probably see some resistance right up here. Maybe it happens during this webinar. All right, and if we count this as maybe an A, could be an A, B, and we could get a pullback here. You know, maybe it's on NFP, whatever, and then, you know, get a little more sideways before we break out to the upside. That's at least my plan when it comes to euro here. Here's the 4-hour chart, and we do have some other considerations, if you will, for support and resistance within this range. So this is kind of a goofy looking fork, but it actually is pretty useful. You can see the 3 pivots I'm using, and this is log scale, but you got the November low, the November high, and then actually all the way over to the January 9th low for the fork. And you can see that the median line, pretty good resistance, support recently, and the upper parallel was really precise as far as its resistance on the top. I mean, it was kind of perfect, actually. And then the 75 line, pretty good for resistance, and we're actually getting up to that now. So that's why another reason to suspect that there's some range resistance here, right? Again, larger trend is toward dollar weakness, but thinking that you probably are in a little bit more of a range in dollar before we completely break to the upside. That's, you know, especially in front of NFPs, right? It'd be tough to see just a complete breakout going into the day before NFPs. Usually doesn't happen like that. So I'd be looking for a little overnight retracement from this 24.96 area, and that's the dip I'd want to buy, right, to prepare for the next move, you know, higher towards probably this upper parallel. If we go to the daily chart, if we go to the daily chart, you can see too, we do have this parallel, which is simply the trend line from the original trend line from 2017. So we're pressing up against that and looking for some pullback from 24.97. Now I'm going to think that you probably have support at about 24 for euro. 24 being, and that's especially if we don't break the high. Okay, if we pull back to 124, 124 is the close from 130. That would be your daily reversal support. So thinking ahead, we could, very well have some 24.96 resistance, pull back to 124, which over the next day or two, which would be very close actually to the median line, right? Which I haven't kind of grayed out now, but would be very close to that, which has been very useful as far as support and resistance since 2018 started. And then we'd be looking for the breakout. Breakout targets. Your target would actually be 27.40. Okay. Now, again, I'm not sure you're going to get there all that quickly. The intersection of all these levels, that we've got is really not until kind of the end of February, back half of February, I should say. Okay, and check out I've got the long-term charts. I'm sure if you're in the webinar, you probably checked it out, but I did the updates to the longer-term page last weekend. Everything's done except for gold, actually. I'm waiting on gold, a little clarity here before I start putting out new things on gold. But, this is going to provide with the longer term targets and why we're looking where we're looking and all that stuff, right? So eventually the target we're talking about for euro is probably the 27.50s. You can see the huge levels here. These longer term charts are really useful. But we also don't want to forget that we have broken out the dollar or the euro and broken down the dollar pretty significantly. And while we should expect two-way trade, certainly, it's possible that we actually go into more of an extended uptrend move, right? So that's something we don't want to forget either, right? It's very easy to say, well, there's 5 waves up, so we're looking for a big retracement. Well, the retracement doesn't have to be that big to reset sentiment, right? Just think back to the downtrend in the euro, so the opposite, back in 2014. I mean, you could have counted 5 waves down right here, right? And looking for a big rally back to here, and guess what happened? It collapsed even more and even sharper. So, you got to be open to more possibilities than just, dogmatic saying we got 5 waves down or 5 waves up and now we have to go back to the former 4th wave, blah, 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 right? Does not have to do that. Market does not have to do anything, okay? So it's always a fluid situation. All right, so that's euro. Bottom line here for euro, folks, is that 24.96 and 124 for me are the levels I'm looking at over the next couple of days, right? 24.96 would be fading the trend, of course. You're fading the move. You can have a really tight stop, so it's okay. And then 124 would be where we're looking to buy, for an eventual breakout to the upside. Okay, cable, going to be similar. This is the this is the daily chart. Sorry. We had an attempt at selling 41.24 the other day and did not work out too well. Was stopped out, and thank goodness for that. If we go to the 4-hour chart, it's similar, right? Actually, you already hit, so we're using 4, this is 4-hour levels. If we go to hourly levels, excuse me, you're going to have these levels right here. So 42.96, That would seem low at 40.24. This would seem a little more appropriate at 40.71. So yes, for cable, same idea. You're into some resistance now. Could see 42.96 resistance. 3 waves down, you know, a rally that's not especially impressive from an impulsive standpoint, but have to be looking to buy weakness in cable, right? So allow the range to kind of play out a little bit more. But, you know, could be something along the lines of, if we go from down here, you got a 1, 2, 3, probably sideways 4 for a little bit longer, and then eventually breaking out to the top side, just like euro. Okay. So levels I'd watch for support here. You got week open at 41.34, right? But this is cable, and that really is a good level, though. Remember, this is the this is what we were trying to trade off of the other day, right? Just didn't work out. I had a grand plan that was going to sell here and buy back here on the median line, and just did not happen. But that's all right. Live to play another day. 55. So yeah, all right. Anyway, so cable, it's always never as clear as the other ones. But yeah, I'd be looking for support on a pullback. Again, not as clear as euro from the level standpoint. There's a couple to watch here: 41.34 and then 40.70 to 40.80. 40.80 is a square root level, right? Which was support on the initial downdraft. As far as the bullish potential for the pound, it's actually pretty significant. So let's revisit. There's an analog that we had from 1989, right? We were looking at it from here because it was really the only time that we had anything similar from the standpoint of the way the market dropped and then the way that it tried to, that it bottomed, right? So that's what we were looking at back here. And this is the weekly chart. And I mean, if this continues to go, I mean, you get the idea, right? You could be up at 160. So taking it down a notch to the daily chart, this actually fits really well with where I think we are, right? Getting kind of getting some push range to new highs. Eventually, the entire breakout happens back at some point towards the the back half of February. So it's okay to try to trade some range and cable up here, with the levels specifically being, again, 42.55 and 42.96, but be aware that we'd be looking for support on a dip because the upside still rules here. Man, if you could get, that would be great. If we could get failure up near 42.96, you would have 618 alternating legs at 40.70 on the dot. 40.70 to 40.80 is what we want anyway, because of, again, the levels I described before. So those should be marked down. It's pretty important. 42.96 to 40.70, 40.80. Okay. Cable, done with that for now. Dollar yen. Silly little bastard that you are. So we've got this really nice slope, and we have gone through it, but stop was saved by a hair so far, and we have turned down. Nice 4-hour reversal bar here with the European high. So whatever, I'm sticking with it. Going to go through losing streaks. That's okay. Stick to your process, and eventually you'll come back. Yeah. Go, bigger picture on this on this dollar yen chart, right? If we look at the broad, we're at a really big spot, right? I threw this up on the long-term page over the weekend, but if we draw our trend line back here, I mean, that's just gigantic. Okay. If we break here, it's really an important behavior change. Okay, for dollar yen, and I'm looking for it to break. I mean, you've also got the 156-week average, which I don't have on here, but that was resistance, and then it was, oh, sorry, it was the 60-month average, which is what I was talking about. So the 60-month average, right? It's been support. It was support all of 2016, and now we actually closed below it last month, which of course just ended. So there's certainly potential for something special to happen here. Don't know if the authorities will allow it to happen, obviously, right? But it's there. The possibility's there. So, let's say that like totally wrong on this. Let's say that dollar yen starts to turn up, right? Like, where would I change my tune on this? Well, if we started to see, first of all, if we trade through here, as I wrote last night, then we'd be looking for probably 110.50 as an important level, and you can see why, right? Just beautiful, slope action here. So I'd be looking for 110.50. So I wouldn't be turning bullish if we get stopped out. I'd still be looking for resistance up here. But what would make me really change my mind is if we started to see, so this is the, the system stuff, right? The alerts. If we started to see buy signals show up, right? So as it is now, you can actually see this is the 4-hour chart RSI. Look where it is. Okay, we're right at 60. Again, this is where you want to be shorting. We're giving ourselves very little room for error, and that's okay. Because if we're lower, we should be lower now. Okay. And I know NFP's tomorrow, but sometimes you just got to take a shot, right? So deep oversold condition. Okay, RSI crawls back to 60. That's what I want to see for a short, right? Now, if we get a ramp, right, and we go through 110.50, but then we start to see blue dots show up here, right, and we start to get a different 4-hour profile on RSI, then sure, I will change my mind and I'll be happy to. Okay, but until that point, I've got to stay with the bear side here, especially at this spot, right? You can see that the Australian dollar system just closed out all of its longs, which it was buying in late December, right? So it was just stopped out at the 5-day low. So let's move to the Australian dollar. So Aussie dollar, we have got, the bottom line here, folks, is that look, we've got a big breakout, a big move higher in the Aussie. And Mahai, what's going on, my friend? Asking about DAX and S&P. Absolutely. I've actually got S&P all lined up and ready to go. But we will take a peek after I'm done with the currencies and some macro stuff like gold, silver, crude, and bonds. But the Aussie dollar, okay, so this is the daily chart last night. We have come into the median line. And again, this is from the 2016 trend line. So really nice, beautiful reactions on these associated slopes, right? 75 line was resistance back here, okay, back in July and September of 2017. And we are back to the center line of the channel, which itself actually is not all that important, right? We haven't had a lot of trading, or we had trading around it, but it hasn't been really good support resistance. The level it has been is the parallel just below it, which is the magenta parallel, right? This is perfect. Lots of really good levels. And we're getting close to that 20-day average and a square root level, which is 79.78. So you got a bunch of stuff here, 3 things, okay? And again, 75 line, right? That was resistance. So what we're looking for is a move back to that level, which is going to be the 5th square root level at 82.43. So this is where we are going, in my opinion, in the Australian dollar. Okay. Ideal, situation here is to get a little more weakness, right? I'd like to see us get into this 20-day average. We haven't touched the 20-day average since early December, and that itself can be a pretty good strategy. When you're in a trending market like this, look for the first tag of the 20-day average in order to, basically get on board with the trend, right? So that is what my plan is here with the Australian dollar, right? Finally getting some sort of a correction. It's really the first correction, I guess, if you want to call it that we've gotten since this whole move started. If we take a look at the 4-hour chart, right? Remember our 4-hour RSI, we have not gone oversold yet, right? So if we can get a little more weakness again into that 79.78 area, 20-day average, maybe on NFP tomorrow, it'd be perfect. And then don't go oversold on the 4-hour RSI. I don't want to see it oversold, right? Because I want to keep it within a strong, strong uptrend move on the 4-hour RSI. All right, so that's Aussie. The levels to pay attention to. Kiwi is acting pretty good here the last couple of days. Has a very bullish look to it on the near term, right? Kind of see a little, inverse head and shoulders continuation type of deal here, right? Just be a shoulder, kind of double bottom head, and another shoulder here, 4-hour chart. Obviously, a very short-term pattern, but does set up for another move higher. On Kiwi, on the longer-term chart, can make the case that this is a first wave higher, right? And that you've got kind of a complex ABC flat here. But at the end of the day, what you've got from 2016 is just a big rectangle, okay? And a breakout of that rectangle really sends you on a pretty special trending move. I mean, we're talking as hot. We're talking a target here of 80.70. So we're not talking peanuts, okay? Is that going to happen now? I mean, I don't know. What I do know is that just like Aussie, I want to be buying kind of weakness. I want to be buying dips. On this longer term chart, we do have overhead right here. Okay, there's a fight that's going on. You know, in my dreams, I'd like to get a pullback to the 52-week average. Right, that's going to be essentially this blue trend line, which is your trend line from back in 15, 16, support in May 17, false break below it, back above it. I'd love for that to come back and be support. You know, if we can do it, maybe it happens. It could happen in March. It could happen later in the year. I don't know, but it's something I want to keep abreast of. And longer term, you do have some slope resistance up here. It would be just at new highs. So the near term picture, again, you've got a string of ups here, but could take out those highs before we get a meaningful pullback. Something that markets, do like to do. Frustrate the hell out of pretty much everybody. So when it comes to Kiwi over the next couple of days, what I'd be looking at here, I would be looking at, again, let's take our cues from the tactics that we talked about with dollar and euro and pound. Look at the low here. What's that low? 73.27. 73. Yep, 73.20s. Okay, so that's where I'd be looking. Essentially 73.20s. Okay, for support. We do have a shorter term slope chart that we can look at too. Right? So you've got the fork here from November, December. Good looking fork. I have extended moves. You can see the width here. I have extended moves of parallels here and here, which, as you can see, are also really solid for support resistance. The support that you got here last night during Europe is on the 75 line. I think you can be bullish, above 72, 78. I don't want to go so far as to say that this low is safe at 73.34 just yet, right? Because you could form something more of a triangle to kind of an A, B, C, D, E, go a little more sideways before we really go. This is probably the this is probably 1, 2. This is your third. This is your fourth wave within this sequence. So we should be looking for a push higher in the fifth. Let's see if this channel's in Elliott form. Pretty darn close. So that's something to watch as well. I would draw these on your chart. We're going to put them in nice magenta here. Okay, so connect the tops of waves 1 and 3, extend it off the bottom of wave 2, and you get your estimated point for the end of wave 4, right? And that can still certainly be hit, because what we're talking about here is if we go sideways for a little longer, you're going to hit it you're going to hit it anyway, right? Just by going sideways for a bit, sideways to maybe down a little bit. So sets up very well for a breakout towards the 75.30 level, maybe 75.89. Okay. You can see here my theme with the dollar is generally lower. It's just not, it's like we have some corrective activity, I feel like, that still needs to happen before we really go that route, right? All right, let's go to dollar CAD. Okay. We've talked about this in the updates for a while. I think that there's the real risk of a pretty big dollar CAD breakdown here. You know, we've got, this is log scale, which again is better on the downtrend, you know, than the arithmetic scale. On the uptrend, right, the uptrend lines were better on the arithmetic scale, but on the downtrend line, it's better with log. Primarily because the 75 line was support here, 25 line was resistance here in December. So that leaves me looking at, you know, we're looking at this median line, and we're at the very center now, right? And we're trading around it, right? We're building juice for something. I want to be short here. I just, it's really tough to be, you know, pressing this, because you can completely envision a scenario where you get one more pop, right? Maybe up close to 124 before it tanks. Now, one thing to do here is to pay attention to the Australian dollar, right? The commodity currencies together. So remember, with Aussie, we've got that really clean level down at 79, call it 79.80, right? We got pretty close today. Low today is 79.87, right? We're currently 80.25. Well, if you do get a pullback, if you do get a little more weakness from here, so, you know, you go below yesterday's or today's low tomorrow and get that Friday low, right? And then turn, then it would tell me that the dollar CAD is ready to go lower. So that's something that I'm going to watch closely tomorrow. But that could put resistance, probably have resistance closer to 23.40 or so, the median line itself, right? Rather than all the way up at 24. Don't forget, tomorrow, I think you've just got U.S. jobs. I don't think, yeah, there's not, unless this calendar is wrong, there's no, we do not have Canadian jobs data, right? Or sometimes they happen on the same day. Most of the time they happen the same day. But it's going to be next, I guess, on the 9th is when that's going to come into play. So, yeah, all you got to do is worry about the NFPs tomorrow, U.S. jobs. All right. So that's the thought there on CAD. And the focus, by the way, is still down towards this level here, the 2120 area, before you get something of a bounce. That is, again, a parallel. Also got the spike low down here from 915. All right, let's go macro a little bit. Here's crude. Crude oil still have us higher until 68 and change, and pullback should be bought into 62.50 or so to 63. Basically, the median line. That's you know, that's all there is to it. So you want to be buying into the median line. That was resistance back in November. You know, big surge through it. You can see the action on the median line tells you this is really something that should be paid attention to closely, because it was resistance, and the break through it was valid. It's just like you're breaking through a major pattern, right? It's a big move up on 1-3. So I'd be looking for support down here, and frankly, I'd stay bullish. Probably shouldn't go below this low here. What is that? 61.12. It's a 1.5 low. All right, gold, silver, and bonds. Let's do bonds first. So bonds are breaking down big time. Again, huge breakdown, median line, support, break. You can see it tried to hold up here, and then that break makes it even more, you know, more significant. So big breakdown in the bonds. If you do get a bounce or whatever, you know, you should have resistance at the median line. Okay. For me, I think that you're probably headed to this 1981-2000 trend line, which, you know, depending on when you get there, bond seasonality is actually negative through kind of early March. So that puts you down in your 142 around that time, right? It's a pretty big move. You know, here's the weekly chart. You can see here's the 1981 low. Here's the 2000 low. I mean, big time, right? Every bond bear market has stopped close to this line, you know, either on it or just below it. So that's a big spot to watch. You know, you got all these people talking about, like, I know they're talking about the rates, you know, and the 3-year, or sorry, 3-year, the 10-year 3%. Well, the big test hasn't happened yet. The big test is down here, right? We're not even there yet. So we'll get there, and then we'll see what wants to happen. But that would be a place to look for some sort of a bounce in the bonds, or a low, if you want to call it that. Okay, going to gold and silver. We'll look at the CFDs because I know that's probably what most people are trading rather than the futures. So I'm looking for gold to hold up here, right? We're got an inside day here today so far in front of NFPs. Pretty clean on the slope levels. I mean, it's just a channel, right? From 2015 low, 2016 low. We do have positive seasonals in gold and silver, for that matter, you know, through really most of the first quarter. So for me, it's kind of like dip buying should be a thing here, and be looking for, you know, upside more or less from here, right? So if we go intraday, level that you need to get through is that right there. That was a big high volume bar. In gold, that was on the 25th. It's the same one that, you know, you had where you had the euro high volume, which we're getting very close to, by the way, 24.96 is what we're looking at here. Anyway, so yeah, if you can see it's important. It's been resistance a couple times here the last couple days. So if we get through there, I think you're probably home free on gold until first stop 1390, right? Second stop up near 1430.50. 1430s, as I noted last night, because that's the August 2013 high, right? Now this needs to hold, right? If we don't hold, let's, you know, give it 1324. If we don't hold 1324, I think gold's probably in trouble. I guess my guess would be probably back until 1290 or so, right? I mean, I hope that's not the case, but that is what that's the reality. This is GLD, which is the ETF, and actually this chart probably looks even more bullish because this is the trend line from 2011 and 2012. You can see the top side of that. You know, we've broken through it now, right? Consolidated around it, broke through it, median line, came back, tested the level. It's even cleaner than, I think, the CFD level, or the CFD chart. All right, what about silver? Silver is still not as clean up here as gold is, right? Like the slope is just not there like it is with, you know, like it is with gold. You certainly see the potential here. There is a worry. The one worry I do have on the precious metals is the fact that we haven't taken out this high up here, you know, in silver, right? And gold gold did do that. Gold traded through that September 2017 high. Okay, that's a divergence. It's like Aussie and Kiwi, right? When they diverge, or Euro and Swiss. Not so much now, but it used to be, especially Euro and Swiss used to be, you know, the divergence between them. I'd say maybe Euro and dollar index, right? Non-confirmation kind of Dow theory type of thing. So with silver, look, you're above the 200-day. It's flat, indicative of the range market that we're kind of in. And I'm positive here. But I'm taking my cues from gold. So, you know, positive because the gold chart looks positive, and we've you know, found support on the 20-day and all that stuff. But if we start to break down, you know, here below, let's call it the one. You know, what's this low here? Right, we start to break under 1673, probably good night for a little bit in silver. So nothing quite definitive yet for me in silver. I like gold. Silver is kind of a concern because, again, the non-confirmation with the September high. Okay, I want to look at show you a couple of stock, you know, equity indice charts here. So again, we've got a lot of updates on the S&P here. So we've got some levels to pay attention to. 3047 is one. I think we pull back now and then make a run for it later in the year. Right? Here's one reason why. This is the comparative with the 87 post 87 action. So you're overlaying crisis or price action after a crisis with price action after a crisis. Makes sense, right? It's been pretty good. So yeah, given the craziness going on with the sentiment, I think it makes sense to probably look for some sort of a pause or a pullback here. We've got the long-term charts. We're at a level here on this chart. This is the S&P. Okay, crosses through these levels, very well defined on the angle, and we're looking probably for support down here, which would fit with the idea that we're getting. You know, we'll put it up so we can look at it in real time, but. There you go. Okay. So let's say we get a pullback into, let's just say it goes into March, looking at, you know, 2660. I mean, it's nothing, right? 2873 minus 2660, 200 points. I mean, you're talking about a 7% pullback, 7.5% pullback. You know, that we haven't had anything like that, obviously, forever, it seems like. But you get something like that, it'll probably get people's attention, right? I think that would, and we'd be coming back essentially to where we opened the year too. So that would be kind of what I'm thinking happens. You come back, test the year open, go higher from there. There's other charts such as like different indices, like so XLI, which is the industrials, very clean, right? Shift fork from 2009, excuse me. And this parallel, really well defined. It's been resistance, it's been support, and we've been at it for 4 weeks now as resistance. Same idea here. We're looking for a pullback to the median line, which was the former recent resistance. That puts you down near 76 or so. Your high is 81. %, some, you know, 6 and change % drop. XLF financials. Same idea, right? Shift fork off the low here from 2009. And this is your 75 line. Actually has been more or less perfect as resistance for, I guess you could go a little higher. Let's see here. You could go a little higher because we can make it, no, sorry, it's the yeah, 75 line. Okay, so maybe it wants to strike, because if you go a little, you want to get like really perfect on it, you're talking 37, basically 30-70. And then the line here, which is your, you know, between the 75 and the 50, that's support, 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 resistance, support early in the year. So we're looking at, we should have some corrections here. So for short term on the S&P, I think I wrote about it 2 nights ago, and the level we were looking at for short-term S&P, so here's S&P, I think we were talking about basically 2850, right? Yeah, so it looks like we're doing a flat pattern here. So you got A, 3 down, B, so A, B, C. So this looks like the pattern to me, right? This is, you've got my high. Will it be more like 2840 or 2850? I mean, we're splitting hairs there, you know. Perfection is not a thing in this business. But I'd say, I mean, 2850, right? Just 2850 is the highs from over here. It's also the 618, 2854. So I would give it 28. I would wait out for 2854. I mean, hell, you know, we topped, or we made a top 2 days ago, 3 days ago. I don't think there's any reason to fight, like, you know, worry that you're going to miss out on resistance at this point. But look, you know, we're looking at, so we got an A, B, looking for a C. That's all there is to it, right? If we look at the Dow Jones cash market, it's actually pretty clean, right? Go to like let's go to a 30-minute chart. This might be the one that you want to follow. I mean, even a 15-minute chart. You can see how clean this is. 1, 2, 3, 4, 5. That's a 5-wave drop, right? So I would follow the 618 here. So that's going to be 26,390. And that's going to be this high. 124 high. Okay. So I would look there, maybe take your cues on the S&Ps from, you know, from the Dow, right? You know, I would write that level down, 26,390. Now the gap in the Dow is a little higher, but that's where I would kind of look at it being a bear on a short-term trade. So you see this, we'll go hourly now. You see this magenta line here? That to me is what I would term kind of like the energy point in this, for this market. So it goes off the August high, and then it goes off the December high, or early December high. It then crosses through the mid-December high. You then had consolidation around it right into the beginning of the year and gapped higher, and we went on the big run. So that level to me is more important than just this channel. You know, if you get, first, you're probably going to see some sort of a fight here. But if you get back, if you get below this, that's a big deal to me, right? Because that's been really a defining angle in this market for quite some time, right? So we get below there, and I think you probably see a change in behavior from, you know, the grinding session that we've got going on now to more of like a free fall type of move, right? That's what I would pay attention to. So for me, all about this line right here. Okay, let's go to the DAX, and then I will take a look at Aussie Kiwi because I said I would, and I don't like to lie. The DAX. So a market that's actually down. It's crazy to believe that, but certainly this tells you how much a function of the recent dollar weakness is on the S&P, right? We're seeing currency movements now basically be stock movements. So here's the hourly. What did we talk about last time, Mahai? We talked about basically, you know, we had 3 down, 3 up. So the risk here is that you do go into a triangle and then break higher. It's really hard for me to believe that, I guess, because we have such a full count here, right? We got this 1, 2, 3, 4, 5. So maybe it's, you know, you call it a double top if we want, but really it's kind of a sets up for just a nasty C wave drop, right? So this is A, this is B, and now we're in a C wave that's going to get down towards 12,490, right? Our top right now is 13.6. So we're talking that divided by 13.6. It's an 8, you know, a little over an 8% drop from the high. Definitely is in line with what we just talked about in the S&P, right? I think the S&P actually talked about something like a 7% decline to the next big support, right? From where we made a high. So that is my call, I guess. Now this should be, let's see if this is, do we have anything to make this so-called tradable at this point? Is there can we draw something in here that helps us? Not bad, right? You've got, that's a good thing. We are kind of consolidating around this. You've got some touches here. So this offers some hope. I like this. I like this chart. Okay. So you can see this would be, see the parallel here? Crosses this. If you get up there, it's resistance. Okay. That low, 13,129. To me, that's the place to sell if you get a rally into that spot. Let's see if there's something steeper. So you can't look at anything. You could look at this one because you have tagged this, but we don't have the touches aren't as clean. I would look at this for now because again, you have cleaner action on it, right? Parallels, former support, break, come back into this level, let it be resistance, okay? So 13,129 for a short, in my opinion. You're going to have, you know, could have some support right down here too, on top of these old highs. So don't chase weakness into support. Be disciplined, wait for a pop. All right, Aussie Kiwi, let's go there quickly. I got to wrap it up. I've gone a little bit over. Aussie Kiwi, we're on the 200-day. But you do have a head and shoulders here. So this is one where I would say that you can get a, you know, risk of a, call it a head and shoulders failure, right? Is certainly present here because you're dropping into the 200-day average, and you do have some parallel stuff here. It's not not all that clean, right? It's not the cleanest chart in the world for me, but you got something there. For me, there's nothing to do here. I like both Aussie and Kiwi higher, right? We talked about Aussie coming into support maybe a little lower, and Kiwi going sideways before going higher. But if we get like a reversal bar down here over the next few days, then I'd have something there, right, for a possible trade. Just not something that I'm all that interested in trading at the moment, to be quite honest with you. But these are my thoughts. My thoughts are you are at support. Obviously have a clean topping pattern, but this is the kind of pattern, given where you are, that I can envision failing, right? But you got to have a show of support first before you can do that. All right. Thank you all very much. And thank you for your time as always. And good luck the rest of the week, what's left of it. NFPs tomorrow. Excited to lay out the levels for that heading into tomorrow. And I'll have out the update later tonight. All right. Take care. Bye. Thank you.